Are these high interest rates going to drop home prices? Stick around to find out. James Rhoads here with the Ramsey Rhoads Group at Berkshire Hathaway Home Services right here in South Central PA. As you can imagine, I've been getting this question from homeowners and buyers on a daily basis. The answer is not cut and dry, and we definitely don't have a crystal ball to figure out if the rates are going to continue to rise even further this year. To give you a better idea of whether your home is poised to lose value in the coming months, or if prices might be falling, I'm going to address a few key points that are going to explain what's happening in our local real estate market. Number one, mortgages are getting more expensive. This is pricing certain buyers out of the market, and unfortunately, rent is also going up as a result. And that's going to be driving a few of those buyers to that market since they're getting priced out of the market. Now, I want you to stick with me because there's more on those buyers here in a minute. Number two, there is still a huge national and local shortage of homes available. The low supply is keeping the prices high, and it's going to continue to keep these prices high until we see a shift in the number of homes available. Number three, we are not headed for a market crash. The current market conditions are a result of low supply and high demand, not bad lending practices. As a matter of fact, here's where I need you to follow along with me for a minute. Let's pretend we are trying to purchase a house today for $250,000. And with our current rates being around 8.25%, that will cost you $1,784 a month for your principal and interest payment. Let's also pretend that those rates do indeed drop at some point down to say 6.25% again. And that's very likely going to increase a lot of buyers jumping right back in the market, and we could very well see these home prices get jumped right back up as a result of all the bidding wars that are going to take place all over again. Now, because of that same house that we talked about before being valued at $250 might increase up to 20%, and that's really not unreasonable to think about since we just happened to have this happen these last couple years. And even with our lower interest rate being around 6.25%, your monthly payment is only $1,754 a month. That's $30 a month difference. The worst part though is the $50,000 of home equity you just lost by waiting. Now stay with me here. Let's say you did buy the house today for $250,000. If you decide to refinance later at 6.25%, that decision would drop your payment down to $1,462 a month. That's over $300 a month cheaper. Plus, the best part is you gain that $50,000 of equity and you have a house worth $300,000 now. I really want you to think about this when you're planning your next move. Now, it's your turn. I want to hear from you, so drop me a comment. What is the interest rate you are waiting to see before you get back in the market? Also, if you're listening to this and wondering how the current market can affect your current home buying and selling decisions and goals, drop us a DM and we'll get to work together on a plan that's going to help you navigate this crazy market. And remember, there's opportunity in every market. Thanks for watching, and I'll see you very soon.